Hey everybody, I wanted to make a video about the level two, the total view, the order book, which is what we're seeing here on the screen. I'm currently looking at the stock Tesla. It's currently after market on February the 16th of 2023. Now, let's just go over quickly what this is. Okay, what this is a listing of orders to buy or sell Tesla that are pending. Now, because it is after hours, we have these orders up here, which these orders that we're seeing currently, because it's after market hours, these orders are showing where things were at the close of the day, like at the closing bell. What we want to pay attention to right now is everything is slightly below there. So this is the current bid, and that's the current ask. Okay. Actually, sorry, the current ask is 198.97. Sorry, that's the current ask. So just kind of ignore these over here for now. I apologize that this might be a little confusing, but this is the start right here, 198.90. That's the current bid, and the current ask looks like it's at 199 right there. Okay. During the regular part of the session, it will be a little easier to read because the bid and the ask will be at the top. But after hours, these instruments, these windows will archive certain things that happen at the close. Okay, so it's a little confusing, but it'll make more sense later. Now, just to tell you, Tesla basically closed today at 202.04. So currently it's trading below the closing price of the day. So it's been moving down. All right. So again, these up here, when you're after hours, are just going to show you where things basically were at for certain exchanges at close. And the current bid ask is on, looks like it's mostly on ARCA. So we've got 199.02 as the current bid. And we've got 199.10 as the current ask. And one easy way to check that is to look at the time and sales. If I see 199.09, 199.10, etc., then I know that's basically where the market's trading at right now. So let's go over the components. The first part is the time and sales, which is the part on the right. What is time and sales? Time and sales is basically a listing of the transactions that have occurred in a stock, every transaction that occurred. Doesn't matter if it's on the regular exchanges or maybe on a dark pool, no matter where it took place, the trade has to show up in the time and sales. So let me just emphasize that. Any trades that take place, regardless of how they happened, whether they were a block trade negotiated between two parties, whether it was done in a dark pool, whether it was done on ARCA, NASDAQ, EDGX, AMEX, wherever it's done, it's going to show up here in the time and sales history. So here at the top, we have the last transaction at 17:13:24. That's my time central. And as you can see now, it's moving forward. So now we have 17:13:35. Now we have 17:13:36. And this is telling me the time that this has happened. It gives me the hour, minute, and second. I'm sorry, hour, minute, and seconds. Actually, sorry, I did say that right the first time. So this happened at 17:13 and 47 seconds, right? This happened at 17:13 57 seconds, right? And if it's in red, it means that someone sold at the bid. So the left side is the bid. So if someone sells to any of the bid prices that are currently available, let's say someone sells at 199.01. If they sell at that price, then it's going to show up here. Now, actually, this is not an available trading price. This is the actual bid right there, 198.85. But 198, okay, now it's 198. Still 198.85. The one next to it is 198.81. So what is the bid? The bid is the price that anyone, is asking to buy at. So they're putting in a bid to say, hey, I want to buy Tesla at whatever price they put out there. So if you want to buy Tesla at $198 a share, your bid would be 198. If you want to buy Tesla at $199 a share, your bid would be 199. So a bid is a price that someone has indicated they want to purchase shares at. And when I say indicated, it means they've actually placed a trade on one of the exchanges, NASDAQ, ARCA, EDGX, etc. These are all venues that you can place orders on. Now, a lot of us aren't familiar with these venues, and when we're in the challenge, we're only using the NASDAQ. We're only using this one, right? But there are other exchanges that exist and other venues that exist where stocks are traded, and basically you can send orders. The general market can send orders to whatever exchange they want. So that means that there will be bids at different exchanges. They may be at the same price, they may be at different prices. But a bid is simply an order that is pending where somebody is trying to buy. They're not accepting whatever price is available now. They're trying to wait for the market to come to them. So this is why we call this the passive buyers. These are people that are waiting. The bid is a set of passive buyers. They're not aggressively trying to get into the market. They're waiting for the market to come to them. And of course, on the ask side, the other side, which we can see here is requoting, right? So at the top, underneath where it says LULD, underneath that we have the current ask. Now the ask, or sometimes called the offer, that means the same thing. Ask or offer, they mean the same thing. That's the price at which somebody wants to sell shares at. So in other words, they're looking to sell shares above the current bid. So if the bid is something, let's say the bid is 198, they're trying to sell higher than 198. So maybe they want to sell at 198.01 or 198.10 or whatever it may be. So in short, this right here is the current offer, the current ask, where someone is attempting to sell shares at. Okay? Now, that person or those persons, they're passive. They're not aggressively trying to get into the market. They're waiting for the market to come to them. So let's suppose that this ask never changes. It just stays exactly at 198.79, and there's exactly whatever number of shares over here. This is the size of shares. So if it says 100, that means there's 100 shares. If it says 1,300 or 1,200, it means there's 1,200 shares. So whoever is the individual or group that has shares to sell on the NASDAQ, let's say, there's a total number of shares they want to sell, and that's what we see there. That's the visible amount of shares that they've indicated they want to sell. Now, of course, they may change their minds and up the amount of shares they want to sell later or get rid of it altogether. They could cancel their sell order and wait till later. But as long as it's there, if someone wants to accept that before it's canceled or before someone else takes it, then it's there. So let's just emphasize that point. Both bids and offers can be canceled or modified, but once someone accepts the current bid or the current offer when it's there, then that offer is taken out, as we say. And now, if someone wants to buy after that or sell after that to the bid, they have to look for whatever's available next. So in other words, if 198.59 was available and someone bought at that price, and the next available offer was at 198.60, well, I can't buy at 198.59 anymore unless I put in a bid where I say, okay, I wanted to buy at 198.59, but it's no longer available. So I place a bid that says I still want to buy at 198.59. So now my bid shows up over here where I'm waiting for someone to sell to me. In other words, in order for me to buy at that price, if it's under where the market is now, in other words, if my price I want to buy at is under the current lowest offer, then I have to wait for someone to sell to me. Someone has to be willing to sell to me at that price. Likewise, if I wanted to sell at a certain price, let's say 198.35, let's say I want to sell at 198.35. Okay, we're 36 now. And let's say I tried to sell at that price, but someone else got there before me, or maybe the person who was saying they wanted to buy at that price canceled their order, and the next available order, let's say, is 2 pennies lower. Let's say it's at 198.33, and I said, well, whoa, I don't want to sell at 198.33. I want to sell at 198.35. Well, in that case, I'm going to have to put in an offer, a limit order offer, where I would show up on this side and I would be saying that I want to sell at 198.35. So basically, the limit orders that appear on the bid or the offer, they're available currently. As long as I take advantage of them while they're there, I could sell at the price that I see or buy at the price that I see are currently available. But if someone else takes that first before I get a chance, then I miss out on that. And the only way I can get in is if someone else shows up and offers the identical price that I originally wanted. Otherwise, my only options are to accept whatever price is now available after the price I wanted is gone, or I can put in a limit order myself to bid if I'm looking to buy or offer if I'm looking to sell at a price that is not equal to the current available price. So if you're willing to accept the current price of the market, meaning if you're willing to sell at the current bid or buy at the current ask, then you do what's called a market order. And a market order means you want to get executed immediately at the best available price, and that will be whatever is the best price currently on the bid to sell or currently on the ask to buy. So once you hit market order, you can't guarantee what price you're going to get. It's going to execute at whatever price is currently available, which means, again, if someone gets in ahead of you, just like if you went to a store, you saw online that they have three dishwashers left and they're at the price that you want, you rush down to the store only to find out that some people already bought them before you got there, right? Or you're trying to sell something and you place, you're put your product on eBay, but you knew someone wanted to buy it, but before you had a chance to do that, someone else had one for sale and the person bought that one. In other words, just like in real life where you have to, if you're late, you won't get what you were looking for. Likewise in the markets, if you want the price that you see, you have to act immediately because you never know who the next person coming along will be and what they're going to do. So they may take the shares that you want to buy at the price you want it, or they may sell their shares at the price that you want it before you had a chance to do it. So market orders are the only way to go if you're trying to get in fast at the prices that are currently available. And if the price is not immediately available, you'll get filled, executed at whatever the best next price is. So if you can't get the exact price you want it when you hit the market order, whatever is the closest price that's still available, you'll get that. So the time in sales is just tracking those transactions. When people do market orders, this is showing us in green that someone bought an offer, and red that someone sold a bid, and it even tells us the price. So here it says 198.22, so that was a bid that was sold. 198.28 in green, that was an offer that was purchased. And it also tells us the number of shares. So we had basically 193, no, sorry, 198.30. At that price, it was an offer at that time. 100 shares were purchased at the time index 1724.03. Now, if it shows up in white, it means that the transaction occurred in between the bid and the ask, which means that the trade didn't hit on the bid. No one sold the actual bid at that time, nor did they buy the offer at that time, but their transaction took place in between the bid and the ask, right? So if the transaction took place between the bid and the ask, What that basically means is that we don't know who did what, but we do know this: for every buyer, there must be a seller. So if a transaction takes place in between the bid and the ask, that basically means that two people who are looking to passively enter the market adjusted their prices to match up with each other. So, in other words, I didn't want to buy at the available offer, but I was willing to buy somewhat below it, and I didn't want to sell at the available bid, but I was willing to sell slightly above it. And when those two orders match up, in other words, when two limit orders match with each other, which will only happen if it's in between the bid and the ask. By in between, I mean if the bid is 198.46 and the ask is 198.60, there's a distance between the two that's greater than 1 penny. 1 penny is the minimum increment difference between the two sides. So if the distance between the two sides is large enough, I might be able to negotiate into a buy where I can buy somewhat below the current offer or sell somewhat above the current bid. And basically, for that to happen, someone has to match my order. Someone else has to be willing to do the exact same thing, but opposite of what I'm doing. So if I'm trying to buy 100 shares at a price that's in between the bid and the ask, and someone else trying to sell at a price that's in between, if our prices happen to match up, then we will get a trade. Okay. So white means that the transaction took place in between. Okay. Now, it also could mean that the transaction took place off of the exchange here. In other words, if I see red, that was definitely a sell to whatever was available at one of these exchanges, on the bid side. If it's green, it means there was a buy at whatever was visible on the offer side. But if it's white, it could be in between the two, or it could potentially be off exchange. It could be in a dark pool or something like that. So you're going to see a lot of these white colors no matter what stock you look at, because a lot of times a lot of the transactions are occurring in between, not at the actual bid or ask. But when there's urgency, when something is so urgent that people are just buying and buying or selling and selling, you won't see a lot of fills in between the bid and the ask. You'll just see a lot of red and green. When you see that happening, that actually means that there's such an aggressive desire to buy or sell that people are not trying to bargain their way in. They're rushing in because they're convinced that prices are either about to go up sharply, which would mean lots of green, or go down sharply, which means lots of red. So if you don't see that, then you cannot expect the stock to go up or down very quickly. The only time stocks move up or down very, very quickly, where they just accelerate up very fast, down very fast, and there's very little hesitation. If that's happening, you will see either all green, nearly all green, I should say, mostly green if it's buying, and mostly red if it's selling, and the stock will move very quickly. But when you see a mixture of probably mostly white and then a mixture of green and red, that means that yes, you may have a negative bias or a positive bias, but it's not so extreme that the stock is just going to move in a straight line. So this information here by itself is an easy way to know what you're dealing with. If I see a mixed picture where I have some white, some green, some red, that's normal. That means that the stock is going to have some ups and downs when it moves. It's not going to move in a very straight line. But when I see basically all green or all red, which is not going to be normal, it's going to happen every now and then, very specific stocks under very specific circumstances. If I see that, then that means that the urgency is there, and therefore I would have to act very quickly. So if you see this pattern of trading, you do not have to necessarily accept the bid to sell at or the ask to buy at. If you are not in a position where you're losing and you have to get out, you can wait, right? So, in other words, if I act too quickly when this is happening, the only time I need to act really quickly is when there is a stop loss that I have to get out at, etc. But if that's the case, I just get stopped out at whatever's available, and that's it, right? So that's just the way it is. I'll just have to deal with it if that's the case. But with um with anything else, the urgency is not visible here. If I don't see that here, I just wait. I wait until I get to the price that I want is reached. Okay, so if you see lots of green, you're going to have to buy quickly. If you see lots of red, you're going to have to sell quickly if you want to go in the direction of the trend. Or let's say you bought something and then all of a sudden you see a constant stream of red, then you would have to exit pretty fast. You have to sell off what you've got pretty fast. Or if you went short and you see a constant stream of green, you're going to have to get out of your short, buy your way out quickly, because if you just see a lot of one color, it's not likely that the trend is going to stop very quickly. So a lot of times when I'm looking for a evidence proof that there's a clear bias that people really want to buy or sell at that moment, I just watch the time and sales. When I see a lot of green or a lot of red and not a lot of white, that means that we have a very clear bias at that time. But if I see, like right now, you see like there's a slew, there was like a line of green and white, not a lot of red. That means at that moment, the stock probably was about to go up a little bit, but it didn't last very long, right? Then you get back to the mixture of green, red, and white. So, in short, this will tell you a lot of information, right? The way it's going will give you a sense of what's happening. Now, lastly, what has to happen for a stock to move is that whatever size of orders that I see, like in other words, right here, I see it. Um, like I said, these are this is a little confusing because it's after hours, but I apologize for that. But after hours, things get a little squirrely, like the quotes don't look the same. But basically, going down to about here, just kind of ignoring everything. Um, well, actually, we can still do it. So, right to here, like this part we'll have to ignore because this is not an actual quote. That's just as I say, a filler order. Just down to here is about as far as we can look. So this is going up. This is the offer size. So 216.90 is at that price. There's 5,000 shares available to sell. Then at 216.43, there's 4,000 shares. And then here at 198.80, there's 1,000 shares. So these are larger size orders. So when the market gets to these larger size orders, it's either going to plow through them, or it's going to reverse off of them. It's in other words, we know that we're going to get a sharper reaction when the market gets to a larger order. So these are the places where we can look for potential reversals, and if the stock can break through them, then it's like it's going up a ladder where it's looking for the next target, the next place where there's available shares that's nearby, lots of shares. So in other words, the buyers who want to buy and they want to buy a lot of shares, they got to find someone who can sell a lot of shares to them. Therefore, they're going to chase after wherever the bigger orders are sitting. Likewise, if I have a lot of shares I need to sell, I'm going to chase after wherever the bigger orders are waiting for me, where someone wants to buy a lot of shares. So, in short, the market has a tendency to move towards larger levels of liquidity. Wherever we see bigger numbers, the market tends to move in that direction, which we're actually seeing right now. So, in order for the price to move up or down, you need a transaction to occur. Someone has to buy at market from someone selling at limit. Someone has to buy offers or sell bids for the market to move. And the larger the orders that are on the bid or the offer are, the harder it is for the market to move through it. So big orders will slow the market down, and they can potentially provide support if they're a large size bid, or resistance if they're a large size offer. So, for example, if we suddenly saw an order where someone wanted to buy 30,000 shares of Tesla, that would be an order size bigger than any other bid we can see. Or if someone wanted to sell 50,000 shares of Tesla, that would be bigger than any offer we could see. So when the market reaches one of those prices, it may not be able to go through it because we might not have enough people willing to buy or sell to move through those prices. And if that happens, then the market will reverse. So again, if you can see there's a very large order sitting on the order book, look for reversals to occur most of the time if it's a very, very large order. Expect the market to trade to that order. Expect it to actually move to it. But once it hits it, if it can't go through it and starts to reverse, that oftentimes is a great opportunity to trade a reversal off of one of those key levels. So this is an introduction to the order book. So we know this is time and sales. Red means someone bought an offer and ask. I'm sorry, green means someone bought an offer and ask. Red means someone sold a bid. And white means that the transaction occurred in between. These codes, MMID, market maker ID, are the places where you can place trades like ARCA, NASDAQ, EDGX, etc., BATS. These are all venues that orders can be sent to wait for someone to sell to if they're a bid or buy from if they're an offer. And the quote, the bid price is listed here, as is the ask price is listed here, and the size of shares that are currently waiting on those prices are going to be visible as well. Okay, so the larger the shares are, the less likely the market's going to move quickly through it. The smaller they are, um, the easier it is for the market to move through. Okay. All right, folks. So that concludes that lesson. Hopefully that helps, and have a great day.